Hey everybody, we are here. The market has been a little bit interesting lately, and I'm talking with Tyler Crowe for what it feels like is the first time in a month, probably because it is like the first time in a month. So
First time in a month, plus whatever this week has been, because this sure seems like a couple years worth of market volatility. That's for sure.
I know I feel like today we've had like three recessions, two bull markets, and five different tariff headlines. Um, we're recording this, by the way, if you're watching this later, we're recording this on April 10th. Just to identify which 5% move we're talking about. Um, just to kind of keep you in the loop. So we're going to get into some stocks that we buy right now, even given what's going on and the uncertainty in the market. Before we dive in, please take a minute and check out the link you see on your screen, fool.com/Frankel. Get the top 10 stocks to buy right now from the Motley Fool. It is the best way to support this work we're doing. Again, fool.com/Frankel. So, Tyler, first of all, we don't know that there's a recession coming. That's not a given. It's getting likely. I know JP Morgan Chase now says there's a 60% chance of a recession. I kind of think that's a lowball estimate. A lot of experts think we're already in one, and we'll find out that we are in one once we get the next GDP numbers. But there are some stocks that are pretty good about getting through a recession, right? And I'll let you go first because you always bring some interesting ones to the table. And you have one that doesn't have anything to do with the U.S. economy, really, right?
No, its exposure to the U.S. economy is quite minimal, and perhaps somebody's looking for a little bit of international diversification. You get a little bit of that. The we call it like resiliency of groceries combined with some international exposure. So the company it's probably my most recent acquisition, and probably one I would like to buy more if we weren't doing these types of videos and then having to wait a couple days to actually make our purchases. Company is for me is BBB Foods. This is a grocery store company. It's called a hard discount grocer based in Mexico. They run a chain of stores called Tiendas BBB. Um, as hard discount kind of ensues, it kind of infers it's a business that's like a lot of no frills kind of shopping. You don't see like it's not curated. It doesn't have a deli section. It doesn't have a huge like fresh produce section. It tends to be like consumer staples, um, cleaning products, yogurts, but a lot of a lot of things that are going to stay on the shelves a little bit longer than like fresh produce. It is in terms of like operations, it's a spectacular operator. It's been publicly traded for a little bit over a year now, but it started in 2003. It's a business that's grown to about 2,700 stores. The ultimate plan is 20,000 stores across the entire country of Mexico, and it's a business that seems to be reverberating incredibly well with its customers. We're talking like low teens same store sales growth for many years now, and the 1-2 punch of really really high same store sales growth, high turnover in its stores because it seems to be turning over inventory very fast for a grocer, and then with a high store count, I think it works out quite well as a good investment. I think it appears to be an excellent operator in this business, and groceries tends to be very pretty recession resilient, and in terms of like tariffs and things like that, most of its significantly all of its vendors are based in Mexico, so it doesn't have a lot of international trade exposure to what it's doing. The biggest like trade exposure, I guess, if you will, is that we're all American investors getting earnings per share in dollars, but all of their revenue and profits is in pesos. So just the foreign exchange there is probably the most significant like inter-country risk in that regard. But otherwise, excellent operator, growing really, really fast. I can't make a justification for its valuation because it is such a new company and growing at such a fast rate that its valuation is going to look a little more stretched than most of the things that I talk about on your channel. But I think if you're looking for some recession resiliency and a good operator, I think this is looking pretty attractive right now.
Yeah, and I will actually be in Mexico in about a month, but I'll be in a resort kind of area, so I'm going to see if there's one of their stores there.
You might have to head into the downtown areas.
Yeah, I'll be in Cozumel, and there is a downtown there, so I'll see. Um, so One that I'd buy, and it kind of actually has a lot of Mexican exposure, is Walmart. Walmart's a company that I would be, if we knew that a recession was going to hit later this year, even a bad one, I would be comfortable buying Walmart stock today. Actually, of the roughly 10,800 stores Walmart operates, a little over 3,000 of them are in Mexico. It's a lot of Mexican exposure. They do have some Chinese exposure in their portfolio, but it's less than 3% of the store count. So not terribly worried about that. And just kind of before I even go into why I like it in a recession, just look at the numbers. In 2008, which was arguably the worst recession since the Great Depression, the S&P 500 dropped almost 39% for the year. Walmart stock was up 18%. It's a business that tends to do really well when consumers are struggling, when consumers are feeling the squeeze, like in the U.S. a lot of them are now. They want to save money. People who normally shop at I shop at Publix a lot. Um, we've been going to Walmart more because it's a lot cheaper. They tend to do better when inflation hits, when recession hits. They've done a great job of building out their e-commerce presence, and from a business standpoint, they've done a great job of allocating capital. I mean, if you look at Walmart's total returns over the past 20 years, you might think you're looking at the chart of a tech stock. 16% annualized total returns sustained over a 20-year period is pretty impressive, especially for a company a lot of people consider a mature and boring business. They've raised their dividend for 52 years in a row. They've done a great job of focusing on buybacks. And I do think that the stock could take a hit. It already kind of has. It's down about 15% from its highs, but it is likely to hold up a lot better than most in recessions. And as anyone who invests in Berkshire Hathaway or anything like that can tell you, outperforming during the tough times can be just as important as doing well during the prosperous times. So I am a big fan of Walmart heading into a recession. The proof is in the numbers. I mean, it holds up better during recessions, and in good times it does pretty well, especially with the e-commerce tailwinds going on. So I'm a big fan of Walmart at these levels. I've never owned the stock, but I that might change. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 5 times. Go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 914% as of January 7th, 2025, and are measured against the S&P 500 returns of 174% as of January 7th, 2025.